Hello, this is Coach Mike with WinningsTockCoach.com. I'm going to go over my market overview video for the week ahead, the trading week beginning September 29th, 2014. As I covered last week, we really had to focus on that weekly swing point, 1985.44. We got below it early in the week, and Friday, ironically, in that late day move, as I covered in the chat room for members of the coaches roster, when it became evident that it wouldn't just be that typical type 50% retracement dead cat bounce on the intraday charts, we started watching exactly for that 1985.44 area for it to hit up in there and begin to pull back from. It's actually what it did on Friday. That does have me concerned that we might see some further downside movement in the week ahead, but it's a real simple and well-managed risk to reward plan as far as the S&P 500 goes for the week ahead. As you see on my SPX chart, Friday gave you that close for the weekly candle below the weekly swing point. That 1985.44 is going to serve as our resistance. If we break back above that, well, you know what? We're pretty much just in a 6 week long consolidation pattern, and it's a little hard to trade sometimes in that consolidation. So it might have you trading a little smaller, managing risk if it makes the up move. But on the down move, we're going to look for about 1932.65 as a first target area for the SPX. A little different here on the DJI, the Dow Jones Industrial Average chart. Last week in the video, talked about how it got right up into one of our long-term targets, and we needed to watch for a pullback from that point. Most of the week it pulled back pretty hard, back down to the prior low points of consolidation, but late in the week, Friday it had a decent enough day to pull it up, leaving you questioning just slightly. Now, I would say based on this pattern that if we got continuation to the downside starting Monday, then you definitely start looking for that potential to really a price around 16,532.86 to start things off as a potential low side target. Now, should it continue to make the move, break above the weekly close from the week prior, that was 17,279.74, might still have about 200 points to the upside from there to this 17,470.02, but it's something that's going to be very important to be watching, because as I said with the S&P 500 chart before this, that weekly swing point on the S&P 500 that was given up, to me, was a pretty critical price point to have given up. Moving over now to the RUT, our small cap index, the Russell 2000. Here on the weekly chart, we've seen the change from the brisk up channel to this horizontal channel, now into a down channel. Obviously, I've got reason to think that it's going to continue downwards, but may actually give a halfway decent bounce in the range of 1095.26 or even 1077.81. So overall, gonna look for it to still continue in this gray. You see on my chart the gray down channel now here, because for the first time in a long time, the Russell 2000 weekly chart has given us a lower high. So that's something we've been covering for several months, really since we got into December of last year, and really firmed up our expectation on as we got into April, May, June, and early July. So small caps, sadly, not a lot of long interest from me right now personally. And finally, we're going to take a look at the COMP on the weekly chart here. COMP actually gave up and dropped below the really tight consolidation range point that we had talked about in last week's video. It did hold up pretty decent on this weekly swing point. If it gives up 44.85.93 for the NASDAQ composite in the upcoming week, I think we get a support failure that drops us at least back into this trend line area right in here. So this is what I would be watching for. It may even be a few week decline that maybe gets you into that 43.35 area. So not a huge drop, just less than 200 points is really what my initial expectation would be, but it is going to be interesting to see if it gives up that weekly swing point again, 44.85.93, because that could potentially cause a fairly decent decline. Now remember, we still had this longer term target up here, 47.16.85, and part of this could be Apple's decline in the past week due to some news that came out on it. See if they can rebound from that, and see if that can kind of change the trading pattern, a few others as well. But I believe that even if we come down into this trend line area, as much as I would like to see the markets pull back just so we can buy stock at proper valuations again one day, the trading patterns that we're seeing consistently and over and over and over again are leading me to believe that at least eventually we may see around that 4,700 price range for the NASDAQ composite. And then to go along with the COMP chart, the overall NASDAQ composite, now look at the NASDAQ 100, the NDX. Not as bad of a fall as we saw in the overall NASDAQ composite for the week, but still showing some signs of weakness and closing below the lower end of this consolidation range that's been made over the past 5 weeks. So again, continuation to the downside. NASDAQ 100, probably going to have to look in the area of 39.87.51 or 39.65.16 to locate a potential support point if you do get that downside continuation. This is Coach Mike from WinningStockCoach.com. Encourage you to take some time to understand how the indices could affect the individual stocks you trade. As you probably saw on Thursday, that very few, pretty much no stocks were stronger than the pull of the indices, especially on days where you see support points fail and whatnot. So keep track of your indices. Watch and understand at least your support and resistance points. Those could have a great effect on how your stock trades overall. So God bless you. Good luck in your trading the upcoming week.